Hello everyone, myself Uloganathan. I am sharing my trading experience in the advanced SMC concepts. In the last video, I shared about the pullback. So if in case anyone didn't watch it, please go and check it out. I will leave the link in the description. So if you watch it, it will be easier for you to understand about the upcoming topics. Today we are going to see about the imbalance fair value gap or inefficient price action. All these three things mean the same thing. If a price is in an uptrend, like this, the price is in an uptrend. When the price moves aggressive, there will be market moving in the favor of one side. So that is why it leaves the fair value gap. When there is a aggressive selling, the market price will be moving in the favor of the seller side, so it leaves a fair value gap. We mark that a fair value gap. In future, if price return backs to the buy side fair value gap or sell side fair value gap, price might be react from there and continue moving in the previous direction. If it is in bullish, price might come back to this fair value gap and continue moving upwards. If price comes back to the sell side fair value gap, then that it might be there is a chance to react from here and continue moving downside. So we are not going to take this fair value gap in all places. We will only consider in some certain places only. So we don't take all fair value gaps as our main point of interest. So we will see about those in the upcoming topics. Today I will just explain as easy as possible so you guys can understand. In a bullish market, we just have to take our present candle. We are just going to mark the previous present candle high, and we have to wait for the second candle to make a body close above the previous first candle high, and we have to wait for the third candle to complete. After the third candle is completed, we are going to mark the low of that candle, so we can consider this as the fair value gap. So in upcoming topics, it will be more understanding. This is just a basic video about the fair value gap. So there might be correction in future. So this is for example only. So this is how you mark the fair value gap. If price comes back to this place, there is a chance. It is not mandatory for it is not mandatory for the price to react from here and continue moving up. There is a chance that price might be react from here and continue upside. So we are going to consider this place as a point of interest, and we don't mark these FVGs in all the places. We only consider in the certain places. I will explain it in upcoming. So today we are just going to mark this. So once we mark this fair value gap, we are going to continue marking the second fair value gap, which is our going to be mark the second candle high and wait for the third candle to complete, and we have to wait for the fourth candle. If price came back and mitigated, there is an efficient price action. That means there is a the price has given an opportunity for the seller side, or else it can we can consider it like this, like the price has rebalanced itself before continuing upside. After rebalancing itself, it moved upside, so there is no fair value gap. So we have to consider like this. If there is no fair value gap, if price came back, there will be no reaction in this place. So there is no fair value gap. We are going to do anything. We just have to going to mark the third candle high, and we have to wait for the fourth candle to close, and we have to wait for the fifth candle. Price came back and mitigated. So this is a efficient price action. The price has rebalanced itself before continuing upside. So there is nothing here, and then we are going to continue marking the fourth candle high and wait for the fifth candle. And once the sixth candle is completed, then we are going to mark the low of the sixth candle and mark this as the fair value gap. So in future, if price came back to this place, there might be some reaction before continuing upside. Likewise, this first fair value gap, there might be reaction before continuing upside. So we are not going to consider fair value gap in all places. This is for just example. So likewise in sell side, we are going to mark the low of the previous candle or present candle. So this is our last recent candle. So we are going to mark the low of that and mark the third candle high. Sorry. If there is a gap, we can consider this. In future, market came back to this price to this fair value gap. It might rebalance itself from before continuing downside. So that is why we are considering this fair value gap. Once we have marked that, we are going to just wait for the second candle low and third candle to make a body close. And fourth candle should not have mitigated. If it is mitigated, the price has been moved. Efficient price action has been completed here. So in case in future price come back to this, there will be no reaction from this. Even in fair value gaps, there might be a chance to react from here. So we are not going to do nothing in the no fair value gaps. So we are going to continue marking the low of the third candle and wait for the fourth candle, and prices mitigated by the fifth candle. So there is no fair value gap here. Prices moved balanced itself before continuing to the downside. So there is no fair value gap here. We are not going to do anything here. So we are just going to continue marking the low of the fourth candle and the wait for the fifth candle to make a body close. And we are going to check if sixth candle has rebalanced itself or leave a fair value gap between the fourth candle low and the sixth candle low. So we can consider this as a fair value gap if there is a gap. In case if your price came back to this fair value gap, there might be a reaction before continuing downside. Likewise, this first fair value gap, so price might be react from here and before continuing downside. So we are going to mark like this. I will show you example of the charts. This is for educational purposes only and also for the example only. This is we are not going to mark a fair value gap in the real market like this. So to identify the fair value gap, so we need to mark the order block and order flows only if we find the proper fair value gaps. If there are no proper fair value gaps, we are not going to mark our order flow and order blocks, which I will be upload about the video about the order flow and order block in the upcoming videos. So today I will show you example in the charts. So for example, let's just okay, start from here. So for example, we are going to start from here. So we are going to check the recent candle here. So the black candle will be our first candle. Second candle made a body close. There is a gap between the second candle and the third candle. So we are going to mark this fair value gap and then continue next candle. So there is no fair value gap. So we are not going to mark that. Afterwards, if you look here, this is our black candle will be our last candle. All those are inside bars. So this will be our first candle. Second candle had made a body close, and the third candle had came back and mitigated it. So the price has rebalanced itself before continuing downside. If there is a fair value gap, we can mark it. And one more thing here is, if we check here, there is a fair value gap in the inside bars. We are not going to consider this as a fair value gap. For example, I am showing this. If this is not an inside bar, then we can consider this as a fair value gap. If that is an inside bar, we are not going to do anything. Inside bars also considers in some places only. We don't consider inside bars in all places, which will you will be seeing in the upcoming topics. So we will continue mark just the fair value gaps. So this will be our last candle. So our third candle is this one. Second candle are the body close. The price came back and mitigated the fair value gap and reacted from here in this place. So the price has rebalanced itself before continuing to the downside. And if you check here, there is a pullback here. So we are going to mark this candle as the recent candle. This will be our first candle, and this black candle will be our third candle. So there is a fair value gap between the third candle and the first candle. So we are going to consider this. So if we look for the upside, so this will be our first candle. So recent candle has shifted here. So this green candle will be our last candle. And second green candle has made a body close, and the third candle has came back and mitigated. So price has moved. Efficient price action has been done here. Likewise, in this pullback, if we check, this is our recent candle, last candle, pullback low. So second candle had made a body close, and the third candle has mitigated. So there is no imbalance here. So we are not going to do anything there. So again, if we come here, this will be our present candle in the pullback. There is no body candle close, so we are not going to consider this. And if we look at in this pullback, we can check this is our last candle. This will be our first candle. This will be our third candle. So if you check here, there is a fair value gap. I will going to mark it. So this will be a fair value gap. And again continue. So this is our first candle. Second candle had made a body close, and third candle leaves a fair value gap. So this is our fair value gap. This is our first candle. Second candle made a body close. This is our third candle. So we have a fair value gap. If you check the previous pullback video, then it may be clear. We are not going to FVGs in all the places. If you check here, we have a lot of FVGs. We are not going to consider these FVGs. Only at certain places we are going to mark our FVGs, like in the proper valid pullback. So I'm just showing about how to mark the fair value gap. So this green candle will be the first candle, last recent candle, and the third candle is here. So we have a fair value gap between the. So this is how we mark the fair value gap. So I hope you guys understand. If you anyone don't understand this, please watch this video again. Next topic we will see about the order flow. I think if you watch that order flow and order block video, it might be clear to where to take our point of interest. So I will see you guys in the next topic. Thank you.